In a market defined by tension and anticipation, Bitcoin finds itself locked in a stubborn battle just below the psychologically critical $80,000 level, while altcoins like XRP and Ethereum show signs of building pressure that could soon unleash significant volatility to the upside. Welcome to another in-depth update from Crypto Hub, your trusted source for clear-eyed analysis of the cryptocurrency landscape, where we cut through the noise to deliver the insights that matter most for informed decision-making. Today, we dive deep into the current dynamics shaping Bitcoin's near-term struggle, the mounting catalysts for XRP, and Ethereum's positioning for what many analysts see as a potential breakout move that could redefine its trajectory in the months ahead. The cryptocurrency market has entered a phase of consolidation marked by heightened sensitivity to both macroeconomic signals and geopolitical developments. Bitcoin, the undisputed leader of the asset class, recently tested highs around $82,000 before encountering strong selling pressure that pushed it back below the $80,000 threshold. At the time of this recording, BTC hovers in the vicinity of $79,500 to $8,300, reflecting a delicate balance between buyer exhaustion and lingering bullish conviction among long-term holders. This struggle is not occurring in isolation. It comes amid renewed geopolitical uncertainties, including escalations involving U.S. actions in the Middle East that briefly sent oil prices surging above $100 per barrel, injecting risk-off sentiment across global markets. Traders have responded by locking in profits after a notable rally, with Bitcoin having climbed more than 30% from recent lows earlier in the year. Such profit-taking is typical after sharp advances, yet it highlights the importance of monitoring key support zones that could determine whether this pullback deepens or serves as a foundation for the next leg higher. Examining the technical picture for Bitcoin reveals a market testing critical resistance while maintaining higher timeframe bullish structure. The $80,000 level has acted as a formidable barrier, with multiple rejection candles visible on daily and 4-hour charts. On-chain data from platforms like Glassnode indicates a supply overhang in this region, as short-term holders who accumulated during lower prices appear eager to distribute. Minor outflows have also contributed to selling pressure, alongside elevated exchange inflows suggesting some distribution. However, the broader trend remains constructive. Bitcoin continues to respect the 21-day simple moving average as dynamic support, and its position well above the 200-day moving average underscores the prevailing uptrend. Should BTC successfully reclaim and hold above $80,000 with conviction, the next targets could extend toward $85,000 and potentially retest all-time highs in the coming weeks. Conversely, a decisive breakdown below $78,000 might open the door to a deeper correction toward the $73,000 to $75,000 zone, where stronger accumulation is likely to emerge given historical buying interest at those levels. What makes the current Bitcoin setup particularly noteworthy is the divergence beginning to appear between BTC dominance and altcoin performance. As Bitcoin dominance shows early signs of plateauing or even modest decline near recent peaks, capital appears to be rotating towards select altcoins. This rotation dynamic has historically preceded periods of outsized gains in assets like Ethereum and XRP. Market participants are closely watching Bitcoin's ability to stabilize. Institutional interest remains robust, evidenced by continued ETF inflows even during the recent consolidation, though at a moderated pace compared to earlier surges. Macro factors will play a decisive role here. Any de-escalation in geopolitical tensions could quickly restore risk appetite, while persistent inflation concerns or tighter monetary policy signals from central banks might prolong the sideways action. For investors, the message is one of cautious optimism. Bitcoin's struggle near $80,000 is not necessarily a bearish signal, but rather a healthy digestion phase following rapid gains, setting the stage for resolution in either direction. Shifting focus to XRP, the asset many have long viewed as primed for a major move due to its unique utility in cross-border payments. Currently trading around $1.40 to $1.42, XRP has demonstrated resilience by holding key support levels despite the broader market choppiness. Technical analysts point to a tightening range on the daily and weekly charts, a classic setup that often precedes explosive breakouts. The token recently pushed toward the $1.40 zone on increased volume, suggesting accumulating interest from both retail and potentially institutional players. Fundamental developments continue to bolster the case for XRP. Ripple's ongoing advancements in blockchain solutions for traditional finance, including partnerships with major banks and payment providers, provide a real-world use case that sets it apart from many speculative assets. Regulatory clarity, particularly following resolution of long-standing legal matters, has removed a significant overhang, allowing focus to shift toward adoption metrics. Delving deeper into XRP's potential, several factors align for what could be a substantial upward move. First, the macroeconomic environment favors assets with strong utility narratives during periods of currency volatility and cross-border transaction demand. XRP's role as a bridge currency in RippleNet positions it favorably should global remittance volumes expand. Price predictions for 2026 vary widely, but many credible forecasts see potential ranges from $1.50 up to $2.80 or higher under bullish scenarios, driven by ETF interest and increased institutional treasury adoption. On the chart, key resistance sits near $1.50 to $1.60, with a break and close above that level potentially targeting 2 points and beyond. Support remains firm around 1.30 to 1.35, where buyers have stepped in repeatedly. Volume profiles show increasing participation on up days, while on-chain metrics indicate reduced selling pressure from large holders. For traders, the setup invites patience. A breakout above the recent range highs accompanied by expanding volume would confirm the start of the anticipated big move, potentially catching many sideline participants off guard. Ethereum, meanwhile, presents its own compelling narrative of preparation amid relative underperformance. Trading near $2,300 to $2,320, ETH has shown signs of base building after a period of consolidation. The second largest cryptocurrency by market cap benefits from a robust ecosystem that includes decentralized finance, non-fungible tokens, and Layer 2 scaling solutions that continue to drive network activity. Recent network upgrades have improved transaction efficiency and reduced fees, enhancing user experience and attracting more developers and capital. Analysts increasingly point to 2026 as a potential breakout year for Ethereum, with some projections reaching $3,500 to $7,500 by year-end under optimistic conditions, fueled by staking yields, institutional inflows, and broader tokenization trends. The technical configuration for ETH mirrors aspects of XRP's setup, but with its own nuances. Ethereum has been forming higher lows relative to Bitcoin, with the ETH-BTC pair showing tentative strength. This suggests capital rotation could accelerate if Bitcoin dominance eases further. Key resistance for ETH lies near $2,500 to $2,600, a zone that has capped advances multiple times recently. A sustained move above this level, ideally on strong volume and with confirmation from the relative strength index moving out of neutral territory, would signal the beginning of a more impulsive advance. Support levels to monitor include $2,200 and the psychological $2,000 mark, where significant buying interest has historically emerged. On-chain fundamentals remain encouraging, with staking participation high and total value locked in DeFi protocols demonstrating resilience. Ethereum's upcoming technological roadmap, including further scalability enhancements, provides a multi-year tailwind that distinguishes it from shorter-term hype-driven assets. Zooming out to consider the broader market context, several interconnected themes are shaping the current environment. Geopolitical developments remain a wild card, with any resolution in international tensions likely to act as a catalyst for risk assets. Meanwhile, institutional adoption continues its steady march, evidenced by growing interest in spot ETFs across Bitcoin, Ethereum, and potentially XRP in the future. Tokenization of real-world assets on blockchain rails represents another powerful secular trend, one where Ethereum's smart contract capabilities and XRP's payment efficiency could both play starring roles. Regulatory evolution globally is also turning more constructive in key jurisdictions, reducing uncertainty and encouraging capital deployment. Yet risks persist. Over-leveraged positions in futures markets can amplify moves in either direction, as seen in recent liquidations exceeding hundreds of millions of dollars during sharp swings. Investors must remain vigilant about position sizing and risk management. For Bitcoin specifically, the path forward likely involves continued range trading until a clear catalyst emerges. Long-term holders, often referred to as diamond hands, have shown remarkable conviction, with accumulation patterns visible in wallet data. This provides a floor under the market that limits downside even during periods of retail profit taking. Should Bitcoin break and hold $80,000 decisively, it could trigger a short squeeze that rapidly propels prices toward new cycle highs. Failure to do so in the near term would not invalidate the bull case, but would instead suggest more time is needed for market participants to reposition. In either scenario, volatility is expected to remain elevated, rewarding those with disciplined approaches over emotional reactions. Turning back to XRP and its preparation for a big move, the combination of technical compression and fundamental tailwinds creates an asymmetric opportunity. History shows that assets with strong narratives often outperform during alt-season phases that follow Bitcoin stabilization. XRP's history of rapid rallies when conditions align makes it a focal point for traders scanning for the next high-conviction setup. Monitoring exchange flows, whale activity, and developments within the Ripple ecosystem will be crucial. Positive news regarding new partnerships or regulatory wins could serve as the spark. Similarly for Ethereum, the narrative around its role as the backbone of Web3 continues to gain traction. As more traditional finance players explore blockchain integration, ETH's utility as gas for decentralized applications positions it for sustained demand. Predictions of ETH reaching multi-thousand-dollar levels by the end of 2026 are grounded in network effects and growing total addressable markets in DeFi, NFTs, and beyond. It is worth expanding on the risk factors that every serious market participant should consider. While the overall crypto outlook remains constructive for those with multi-year horizons, short-term headwinds include potential regulatory surprises, macroeconomic shocks such as unexpected inflation data, or shifts in global liquidity conditions. Bitcoin's correlation with traditional risk assets like technology stocks has increased in recent years, meaning equity market weakness could spill over. For altcoins, liquidity can dry up quickly during risk-off periods, leading to sharper drawdowns. Diversification across assets, thorough due diligence, and avoiding excessive leverage remain foundational principles. On the positive side, the halving cycle effects for Bitcoin continue to play out, with reduced new supply issuance supporting scarcity narratives over time. Ethereum's transition to proof of stake has created a deflationary dynamic in certain conditions, potentially enhancing its value accrual. XRP benefits from actual transaction volume rather than pure speculation, providing a measure of real-world demand that can anchor its price during uncertain times. Market sentiment indicators currently reflect a mix of caution and underlying optimism. Fear and greed indices hover in neutral to slightly greedy territory, suggesting room for further upside before euphoria takes hold. Social media volume around Bitcoin remains high but not at frenzied levels, while discussions around altcoin breakouts are gaining momentum. Institutional reports from firms like Standard Chartered and Fundstrat highlight long-term bullish targets that far exceed current prices, providing perspective amid daily fluctuations. For Ethereum, analysts increasingly view 2026 as the year when its relative performance against Bitcoin could shine brightest due to maturing Layer 2 ecosystems and enterprise adoption. XRP watchers point to potential price targets that would represent multiples from current levels if key resistances are cleared. As we synthesize these elements, the title of today's discussion captures the essence perfectly. Bitcoin struggles near $80,000, while XRP and ETH prepare for their respective big moves. This is not a zero-sum game. Bitcoin's stabilization often provides the liquidity and confidence necessary for altcoins to thrive. Investors positioned across the spectrum may benefit from this dynamic. For those focused on Bitcoin, patience around the $80,000 level is key, watching for confirmation of breakout or breakdown. For XRP enthusiasts, the tightening technicals combined with utility-driven fundamentals offer compelling reasons for optimism. Ethereum holders can take confidence from network fundamentals that continue improving regardless of short-term price action. Education and continuous learning remain paramount in this space. Understanding not just price charts, but also the underlying technology, adoption curves, and macroeconomic linkages separate successful participants from the rest. At Crypto Hub, we emphasize balanced analysis that acknowledges both opportunities and risks. The cryptocurrency market has matured significantly, yet it retains the potential for life-changing returns for those who approach it with discipline and informed perspectives. Whether you are a seasoned trader adjusting allocations near key levels or a long-term believer accumulating during consolidation, staying informed is your greatest edge. Looking ahead over the coming weeks and months, several events could serve as inflection points. Macroeconomic data releases, potential regulatory announcements, and on-chain developments will all warrant close attention. Bitcoin's interaction with the $80,000 level will set the tone for the broader market. A successful holder breakout there could ignite renewed enthusiasm across the board. For XRP, sustained trading above 140 with volume support might be the precursor to testing higher resistances. Ethereum's ability to reclaim $2,500 would likely draw in fresh capital and reinforce rotation narratives. In all cases, risk management should take precedence. Using stop losses, taking partial profits, and maintaining cash reserves for opportunistic entries are practices that have served prudent investors well through multiple cycles. The evolution of the cryptocurrency industry continues at a rapid pace. Innovations in scalability, interoperability, and real-world integration promise to expand the total addressable market far beyond today's levels. Bitcoin's role as digital gold appears more entrenched than ever, providing a foundational asset that anchors the ecosystem. Ethereum's smart contract platform powers a growing portion of decentralized innovation, while XRP's focus on efficient value transfer addresses genuine pain points in global finance. Together, these assets and the broader market they represent offer exposure to one of the most transformative technologies of our time. As always, we encourage viewers to conduct their own research and consider their individual financial circumstances before making investment decisions. In closing, the current market presents a fascinating study in contrast and potential. Bitcoin's near-term struggle near $80,000 reflects healthy market mechanics following a strong move, while the preparations evident in XRP and Ethereum charts suggest that the next chapter could bring exciting developments for diversified portfolios. Thank you for joining us here at Crypto Hub, where we remain committed to delivering professional, timely, and actionable insights into the world of cryptocurrency. Stay vigilant, stay informed, and we look forward to updating you on the next chapter of this evolving story. Subscribe, enable notifications, and join our community for more in-depth coverage. This has been your update from Crypto Hub. Until next time, trade responsibly and think long-term. Word count? Approximately 2,950.